I, Sandeep Khosla, extend a warm welcome to you all at our 188th AGM. From its inception by 7 Britishers and 3 Parsis in 1836, the Bombay Chamber has played an instrumental role in the development of Mumbai as a city. Making a positive difference over the years, the Chamber has always remained committed to fostering a culture of technology and innovation, acting as a liaison between the business community and regulatory bodies to improve the ease of doing business. As a Chamber, we consistently bring together leaders from India Inc. and collaborate with the government and regulatory authorities apart from working towards the growth of MSMEs. Today, we are greatly privileged to have Shri Shaktikanta Das, the Honorable Governor RBI, in our midst. My sincere thanks to Mr. Das for taking time out to join us today and share his thoughts. I would also like to welcome and thank each one of you to be here tonight, Bombay Chamber members, our board members, past presidents, Council General of various countries, members of the media, and colleagues, all luminaries in their respective fields. On the agenda later this evening is a panel discussion on Vikshit Bharat, where we have the opportunity to listen to some of the greatest minds in the country, deliberating on the way forward as the country marches towards its goal of becoming a developed nation by 2047. The last year has seen the Chamber conduct multiple initiatives under the able leadership of Mr. Ritesh Tiwari, President Bombay Chamber, and CFO Hindustan Unilever Limited and Unilever South Asia, and we are most grateful to him. I would like to invite Ritesh on stage to deliver his presidential address. May I have a round of applause, please? Ritesh.
Thank you, Sandeep. Our chief guest, Shri Shaktikanta Das, Governor, Reserve Bank of India. Thank you so much, sir, for joining us today and gracing with your presence here. Ms. Pinky Mehta, President, Designate Bombay Chamber, board members, Bombay Chamber, past presidents, distinguished panel members who are coming and going to do some great amount of conversation with us today. Thank you so much for doing that. The Bombay Chamber team, led by Sandeep, who keep doing amazing work and keep churning fabulous events in support of the industry, and everyone else in the room. A very good evening to all of you. I welcome all of you to the 188th Annual General Meeting of Bombay Chambers of Commerce and Industry. As I stand here today, at the close of my 1 year as President, it's a moment of great pride, gratitude, and a touch of bittersweet reflection. It has been an absolute privilege to lead the oldest chamber in the country, founded in 1836. The chamber contributed to the first railway built in India in 1853. Later, relentless advocacy by the chamber led to passing of the Indian Postage Act 1854, standardization of the Weights and Measures Act in 1932, and setting up machinery for arbitration for commercial disputes later in 1880. Carrying forward the legacy of the first chairman, John Skinner, and all successive eminent presidents, this has truly been an honor for me in the last 1 year. This year was a whirlwind of activities, challenges and triumphs. Many of them were done very well. So allow me to bring alive this through audiovisual for the next couple of minutes, and then I'll speak later more on that. Can I have you, please? Thank you. As you could see, we've been very busy for the last 1 year doing many impactful activities and supporting what India Inc. needs. Reflecting back on the last 1 year, there have been many moments that have stayed with me. Today, I will talk about 4 of those moments centered around the 4 pillars of mission that we had this year. First was digitalization. Second was sustainability. Third was diversity, equity, and inclusion. And fourth was ease of doing business. These are the 4 pillars in which you saw bulk of the action activity in the year has happened. Let me start with the first pillar, digitalization. Last November at Bombay Chamber's CFO Technology Conclave, attending Mr. Bari's masterclass on generative AI, I was amazed by how much generative AI has the power to multiply capabilities, leading to multiplying possibilities. Bombay Chamber's continuous programmatic educative interventions like the way we did in this year are paramount to accelerate the pace of digitalization across the country, and that is needed, absolutely all of us know, to capitalize on this potential, thus driving pan-India innovation. There have been several activities of trying to bring this topic alive to all the members and educate what could a technology like this unlock for the organizations. Another memorable moment for me was the stimulative discussion we had at Bombay Chambers. I remember we all got together as ESG committee, and the key conversation was, how do we ensure that we are able to work business and sustainability at the sweet spot? The key conversation that we had as a team, that does it need to operate at the sweet spot, or does business need to operate at the same spot as sustainability? That's what then kicked up the thought for us, why do we always see this area as a cost to the organization and not as a growth lever for the organization? This is what then led us for us to think about a topic of how do we lead sustainability for growth? And then there's a fabulous conclave which was arranged and organized, which took this agenda to the center of conversation, and there's some amazing amount of deliberations and thoughts which were exchanged. The third of the many moments to me was recently the DEI Awards night, a fantastic evening bringing together a truly diverse and interesting audience, celebrating the many inspiring DEI stories across organizations for learning. What we also do is, as we finish the award night, we always take the winning entries and make a flip book. That's an amazing amount of learning in that flip book, which then we're able to share across industry so that the learnings grow far and wide. They're not limited to an awards night. We did this last year, we are repeating the same thing current year as well. But one of the things which stood out for me in the evening was that a thought-provoking moment where one of the audience members asked a question that if I have to drive this, where is the talent pool I can access to? And the very fact we had amazing amount of audience in the room, one of the speakers was able to point out a couple of team members in the room who could be of help. And later on, we did see engagements, conversations happening, connections happening, where problems like this were discussed and solutions were available in the room. I do believe there's a massive power that network has. And one of the things that the Chamber ends up doing is to unlock this network power for the sake and benefit of the industry. When it comes to ease of doing business, the instances that come to my mind are many high-quality advocacy papers that we have submitted as Bombay Chambers in the year. The one instance I will speak about is the work done by Chamber in submitting recommendations to SEBI expert committee set up to review LODR and suggest changes to improve the ease of doing business. As an active part of the expert committee, which I had the pleasure of being on, I saw firsthand how most of the recommendations that the Chamber had were accepted in the room, and many of them today are in public know, and they are in for consultation this point in time. I do hope that many of them will get accepted and endorsed by public, and we should end up seeing improving ease of doing business, where as India, we are taking leap forward in amazing amount of disclosures, but at the same time, ensure that ease of doing business is not compromised. All of these facets of Bombay Chambers have come together in last 1 year, delivering some incredible impact. Let me call out some key numbers. We had over 100 events in the year that we did as Chamber. 25 of them were large flagship events. The Chamber submitted 8 high-quality advocacy papers. Digital engagement, that we wanted to use social media to amplify the impact of the work that we do at Chambers. We had 2,000 plus digital media posts we were able to put in public domain, ensure that the learnings and content get spread widely. This also resulted in 160 more members who have joined the fraternity of Bombay Chamber. I'm sure that with continued active support and guidance of its members, the Chamber will continue to increase its impact, embodying its tenet of giving rather than receiving. I thank the Chamber once again for giving me the privilege to lead it for the last 1 year. I have learned tons as a leader as part of this responsibility. I now take time to pass on the baton to Pinky, and I'm sure under your leadership, Pinky, this chamber will go to several more heights. And with that, now I request our President, Pinky Mehta, to come and deliver her mission statement.
Thanks, Ritesh. Shri Shaktikanta Das, Governor, Reserve Bank of India, our distinguished chief guest for the evening, past presidents, esteemed members in the audience, good evening, everyone. I would like to extend my thanks to Shri Das for his presence in this evening and for taking his time out of his being here on this momentous occasion of our 188th AGM. Shri Das has greatly contributed to the resilience of India's financial system and stabilizing RBI as an institution amidst domestic and global challenges. RBI has recently been awarded Risk Manager of the Year Award 2024 by Central Banking London for enhancing its risk culture and its pivotal role in ensuring the financial stability in India. This truly is a fitting tribute to the incredible work done by our RBI Governor, Shri Shaktikanta Das. I am honored to assume the prestigious office of the President of the Bombay Chamber of Commerce and Industry this evening at 188th Annual General Meeting. It is truly an honor and privilege to have been entrusted with this responsibility, especially given the history of the distinguished past presidents who have scripted the Chamber's rich legacy. On 27 September 1836, little did the bearer of the espiral from John Skinner, the first chairman, and its committee of 10, 3 Indians and 7 Europeans, know what an epoch-making letter he was carrying as a letter was in fact a seed blossomed into one of the prime chambers of commerce in India. Right from its inception, the story of the chamber is a story of an institution dedicated to serving the interest of commerce, industry, and professions in particular, and the economic development of the country in general. Even in 1836, an acknowledgement to the first communications from the Bombay Chamber from the government within the fortnight speaks considerably about the relationship of mutual understanding, respect, and confidence that the Chamber has enjoyed throughout its existence. The Bombay Chamber archives are full of events associated with the growth of the city of Bombay, from its modest origin of a small village to the global metropolis that it has become today. I would like to take a moment of thanks to all the past presidents who have worked relentlessly towards shaping such a magnificent institution that the Chamber is today. I look forward to my presidential tenure, working with our distinguished board members, chairs and co-chairs of various committees and its members, our Director General and the Bombay Chamber team, and will rely on their support to take the Chamber's vision forward. Keeping with the honored tradition of incoming President of Bombay Chamber, I'm delighted to present my mission statement to this august gathering today. Abdul Kalam has said, to succeed in your mission, you must have a single-minded devotion to your goal. While I would like to continue with the mission statement set by my predecessor Ritesh Tiwari, in keeping with our government vision of making India a developed nation, I would like to call my mission statement Collaborative Development Towards Viksit Bharat. The same 4 critical aspects of mission will continue with focus on embracing digitization, bringing ESG to the heart of business, enhancing ease of doing business, fostering diversity, equity, and inclusion. Let me now elaborate on each of them. First pillar is digitization. Digital and technology are evolving at the breakneck pace. As the 3rd largest digitized country amongst G20 nations, India's commitment to embracing modern technologies and driving digital innovations across sectors stands as testimony for the world. In order to continue the momentum to the Viksit Bharat by 2047, IT and digitization will be a focus for the new government. Sectors such as manufacturing, chip making, communications, AI, and quantum computing will be some of the key focus areas to provide impetus to the Digital India program. The shift towards digital payment systems like UPI has reshaped the transactional practice and contributed to financial inclusions. Unified payment interface transactions in India posted a record 57% rise in volume and 44% rise in value in financial year 2023-24 compared to the previous financial year. In March 2024 too, the transaction saw 55% rise in volume to 13.44 billion and 40% in value to rupees 19.78 trillions compared to March 23. We have outpaced all other Asia-Pacific countries in the adoption of digital payments. With AI-based technologies taking over consumer lives, putting the right governance guardrails around the misuse of these technology innovations will be critical. Earlier today, we collaborated with Express Computer, the flagship publications of Indian Express Group, held the AI CXO Summit to explore the transformative power of artificial intelligence in the Indian context. The second pillar is ESG. Adoptions of environment, social and governance rules and practice is not just a choice today, but a necessity driven by our global value chains. In line with the SEBI regulations in India's business responsibility and sustainability reporting, by mandating standardized ESG disclosures, Bombay Chamber will continue to contribute towards making India ESG landscape future-ready by knowledge sharing on global best practice and collaborating with the stakeholders across the ESG ecosystem. India's transition to the circular economy holds immense potential for creating circular jobs, promoting the growth of small and medium-sized enterprise, and driving sustainable economic growth. The International Labour Organization estimates that the shift towards green and sustainable practice would result in 24 million jobs by 2030. Later this evening, we will be unveiling the findings of our first Sustainability Practice Survey 2024, an initiative spearheaded by our Sustainability Committee, chaired by Mr. Arimban Ghosh, Head Center of Sustainability, Mahindra University. We hope the survey will initiate deliberations on the sustainability roadmap for India. We will also be working with SEBI to bring out the white paper on ESG, regarding which we had our first round of discussions earlier today. The third pillar is the ease of doing business. In the past decade, from 2014 to 2024, India has taken its rightful place as a top 5 global economy and is on track to soon reach third rank behind only the US and China. This formidable trajectory is also reflected in the remarkable leap forward in the nation's ease of doing business rank from 142 in 2014 to 63rd rank in 2019. As we all know, the Department of Promotion of Industry and the Internal Trade, the nodal department for coordinating the initiatives under the ease of doing business, is spearheading the dynamic reforms exercise of Business Reform Actions Plan, wherein all states and the union territories in the countries are assessed on the basis of the reforms implemented by them on designated parameters. The Chamber will support these reforms and continue its efforts of streamlining the existing regulations and processes and eliminating the unnecessary requirement procedures, working both with the private and public players with transparency and good corporate governance. My fourth pillar is the diversity, equity, and inclusion. Though companies have been talking about it for a few decades now, very few of them have actually made diversity and inclusion as a priority. Thankfully now, the needle seems to be moving, as many companies are voluntarily divulging their diversity statistics, the pay gap, publishing reports, and allocating funds to the diversity initiatives. As a Bombay Chamber, we remain extremely committed not only in building the awareness on the DI, but also helping to lead the charge in these aspects. The Chamber has very proactive DI committee chaired by Ms. Meenakshi Priyam, CHRO UDAN, and consisting of an amalgam of leading industry names championing DEI. In its vision to open the conversations on solutions towards closing inclusion gaps in the country, Chamber instituted the DEI Awards in 2023. We just concluded our second edition of award, as Ritesh said, in this month, which was again a huge success. We have also been conducting mentoring sessions on DEI, which have received a great response from the industry. We hope to continue not just these initiatives, but also add on new dimensions to the DEI mission by hand-holding MSME through the workshops and trainings where DEI is still a distant priority. Though I have presented this mission statement, I would like to align it with the collective vision of the Chamber. I look forward to the support of my able colleagues at the Chamber to make an impact across the 4 pillars of my mission. I would like to conclude with the Honorable Prime Minister Narendra Modi's quote, Viksit Bharat is a nation where no one is too small to dream and no dream is too big to achieve. Jai Hind. Thank you.
Thank you, Pinky. We look forward to working with you in the coming year. And thank you, Ritesh, for guiding us in the year gone by. It was a pleasure working with you. And one of the Chamber's biggest strengths is the time and knowledge invested by our past presidents, many of whom are present here today. My team and I look forward to continued support from you, Ritesh, as you join this illustrious group in maybe 4.5 hours from now. It is my honor and privilege to now invite Shri Shaktikanta Das, Honorable Governor, Reserve Bank of India, to deliver the keynote address. Our gratitude to you, sir, for having taken the time out to grace us with your presence today. Shri Shaktikanta Das is the 25th Governor of the Reserve Bank of India, India's central bank. He was appointed as the Governor on December 11, 2018, succeeding Urjit Patel. Prior to his appointment as Governor, Shri Das served as the Economic Affairs Secretary and India Sherpa to the G20 between November 27, 2017 and December 11, 2018. He has represented India in various international forums such as the IMF, the G20 and BRICS. During his tenure as the Economic Affairs Secretary, Shri Das was involved in the decision to demonetize high-value currency notes in November 2016. He also played a key role in the implementation of GST, which came into effect on July 1, 2017. The GST replaced multiple indirect taxes and was aimed at simplifying the tax structure and increasing tax compliance. Shri Das was instrumental in coordinating with the states to ensure the successful implementation of GST. In his role as the Governor of RBI, Shri Das has focused on maintaining financial stability and promoting economic growth. He has taken several measures to address the liquidity crunch in the non-banking financial sector and has also taken steps to strengthen the regulatory framework for banks and non-banking financial companies. Under his leadership, the RBI has also taken various measures to deal with the economic impact of COVID-19 pandemic and has provided various regulatory relaxations to support the economy. May I request Mr. Das to kindly deliver the keynote address, sir? Ritesh and Pinky, can you please escort the Governor? Thank you.
Good evening. Before I start speaking, I just request to Bombay Chamber and your organization, for any future event, if I am participating, please cut out the honorable. I think it's enough if you just refer as Governor, Reserve Bank of India. I think that will sound far better. And Sri Ritesh Tiwari, President Bombay Chamber, Ms. Pinky Mehta, President Designate, past presidents and members of the Chamber, members from the media, distinguished guests, ladies and gentlemen. Good evening. I'm extremely delighted to be here to participate in your annual general meeting. In fact, I had been wanting to come for a pretty long time, but somehow it had not worked out, and I'm extremely delighted to be here to share some of my thoughts with all of you about I think you have chosen a theme of Viksit Bharat. I will broadly talk about, in those lines. And so what I have done is that briefly after the introductory part, I just want to talk on two broad aspects. One is about the India's growth story, how we have traversed in the recent years and the way forward. And the other aspect I would be talking about is the Reserve Bank's role in this context, in what the Reserve Bank can do to facilitate and support India's growth story. It has been mentioned, by the President, Mr. Tiwari, that this chamber was established in 1836. So I was actually going through the papers which you had sent, and it's, it's very, I think, a lot of momentous decisions in our country. You referred to the Postal Act, you referred to the Weights and Measures Act. But I find from the list that, which was sent to me, I found that, for example, I think you set up a machinery for arbitration way back in the 1880s. Then presentation of accounts in the printed form, and these are not small achievements, considering that it was done in 1860-61, and also having your accounts audited by a professional auditor. And also, what is of immense importance is that you have played an important role in the formation of the ASSOCHAM. I think you are one of the founding members of ASSOCHAM. And finally, and very interestingly, I think your chamber initiated the by now the well-known Kala Ghoda festival in Mumbai. So congratulations for you for all these achievements. I was listening to Shri Tiwari with great interest about his tenure as president over the last 1 year. My congratulations to you and to all the other members of the chamber who supported you in your initiative. I was also extremely delighted to hear the thought process and the outlook which the incoming President, Ms. Pinky Mehta, has also presented today. And I'm sure you have a year ahead of you full of several activities. It has been for the chamber a phenomenal journey, and all my best wishes to the chamber to even achieve greater heights in the months and years to come. Now, a word about the Reserve Bank before I move to the topic. The Reserve Bank, what distinguishes the Reserve Bank from other central banks? Many other central banks, I would not say Reserve Bank is unique in a way, but it is unique with a few other banks which can be put in that category. The Reserve Bank is a full-service central bank. The range of responsibilities of the Reserve Bank are much wider than most of the other central banks. There are many central banks which are only out-and-out monetary authorities. There are other central banks which are monetary authorities plus the banking sector regulator, but they don't have the power to supervise the banking sector or the financial sector. The Reserve Bank is the regulator. Reserve Bank is the monetary authority of the country. The Reserve Bank is the regulator and supervisor for the financial sector, consisting of the banks and the non-bank finance companies and a host of other financial sector or subsectors, like call it the ARCs, call it the the other kinds of entities that we have in the financial sector, the asset reconstruction companies or the microfinance institutions or the digital lenders. The Reserve Bank is also the regulator for the payment systems in the country, and the overall financial stability of the country is the responsibility of the Reserve Bank. Although it has not been explicitly defined in the Reserve Bank of India Act, but if you read the preamble of the Reserve Bank of India Act, it comes out very clearly that Reserve Bank as an institution is responsible for the monetary and financial stability of the country. And the reason why Reserve Bank has been entrusted with these multiple roles is that there is a lot of complementarity between each of these roles. And if you have one of these roles without a few other roles, then that complementarity gets lost and the effectiveness of Reserve Bank also would get lost. For example, Reserve Bank is the banking sector regulator. It's also the banking sector supervisor. The regulatory function of Reserve Bank expects us to form regulations for the banking sector. The supervisory functions of the Reserve Bank entrusts upon it the responsibility to supervise the working of the financial sector entities, namely the banks and the NBFCs. In the supervision side, if we find any deficiencies or if you find something is happening in that side, immediately the regulatory side can take care of that. So there is a lot of interconnectedness between regulation and supervision. And the power to resolve, so in the event of let us say, a crisis or a severe stress in a banking institution, as it happened in the recent years in a couple of banks. The Reserve Bank is entrusted with the responsibility of finding resolutions or finding solutions for that stressed bank. Under a particular provision of the Reserve Bank of India Act, the Reserve Bank can restructure, amalgamate compulsorily or with willing participants. The Reserve Bank can find a resolution process for a bank under stress. And the powers vested with the Reserve Bank under the Act are very comprehensive. Of course, for this kind of a resolution, we do need the approval of the central government. But it's the Reserve Bank which prepares a scheme for amalgamation or a scheme for resolution or a scheme for revival, whatever you call it. So therefore, the Reserve Bank is very much intricately associated with the growth responsibilities which is vested in various authorities in the country. Now, talking about India's growth story, I would like to say that India is at the threshold of a major structural shift in its growth trajectory. I repeat this sentence again because I have constructed this sentence very thoughtfully, very carefully, and I mean each and every word of it. I repeat, India is at the threshold of a major structural shift in its growth trajectory, moving towards 8% GDP growth in a sustained manner. We are moving towards annual growth rate of 8%. If you look at the average growth that India recorded over the last 3 years, the average comes to 8.3%. And the current year, we have, from the Reserve Bank side, we have given a projection of 7.2% growth for the current year. The Indian economy in the last financial year 23-24 contributed to 18.5% of global growth. That is 18.5% of global growth was driven by India's growth. It's no mean achievement. It was much lower 7 or 8 years ago. And I think the IMF projects this growth rate to go up. And you are aware that it's the fifth largest economy, poised to become the third largest economy, and all that is already in the public domain. Now, the main drivers for this kind of growth in the last 3 years, particularly when I talked about this average growth of 8.3%, and in the current year, the main drivers are now, why I am saying there is a structural shift, is that there have been multiple drivers of this growth that we have achieved and the growth expectation that I am placing before you. It's driven by the various structural reforms which have been undertaken and several other policy initiatives that have been undertaken in the country. Among the structural reforms, at the forefront, I would like to mention the Goods and Services Tax, the GST, about which a mention was made. Now, the advantages of GST was known all along. It will avoid tax on tax, the cascading effect. All of you are associated with various types of business. You understand taxation. You understand how business operates far better than somebody like I would do. So therefore, the GST had certain advantages of avoiding multiplicity of taxes or tax on tax on the various transactions, the various purchase and sales transactions. GST, I think, has been one of independent India's biggest structural reform since 1947. When GST was introduced in 2017, it was expected that once the system stabilizes, and I'm happy to mention and happy to see that in India, the GST has stabilized much faster than many other countries. You have countries which introduced GST but withdrew it within a couple of years. You had countries which took almost 8 to 10 years for the GST to settle down. But in India now, GST has settled down, and that is reflected in the fact that the tax collections on the, in the goods and services tax, there was a time 3 years ago when 1 lakh crore collection per month became a big story. Then it reached 1,20,000 crores. Then it became, I'm talking about per month. Then it reached, so today per month, the collections have already touched, I think in a particular month, it touched 1.7 lakh crore or so. And it is in the range of 1.5 lakh crores to 1.7 lakh crores. Now that is the successful, that is the success of GST. Business has become much more convenient, and business, the costing of, the pricing and the costing of business has become much more efficient and competitive. Together with that, I would like to classify in that category the introduction of the Insolvency and Bankruptcy Code, and I would also like to classify with that the flexible inflation targeting that was put in place in 2016. I was fortunate, and I consider myself really fortunate. I happened to be in the finance ministry during that period, and I was very closely associated with the initiatives of the goods and services, introduction of the GST, the enactment of the IBC, the Insolvency and Bankruptcy Code, and the introduction of the flexible, inflation targeting framework by way of an amendment to the Reserve Bank of India Act. Flexible inflation targeting framework is very important because a stable inflation is at the core of long-term sustainable growth. So I leave it at that. I am not going into further details on that. Now, when for the current year we gave a growth projection of 7.2%, there were comments, and I think for some people, and I don't find fault with them. Everybody has his own analytical methods. Everybody has his own way of analyzing things. I'm not finding fault with anyone, but it's my duty to place on record and to sort of place before you that we are confident about the 7.2% growth for the current year. Of course, in any projection, in any forecast, there would be always risks to the upside and risks to the downside. The downside risks are obviously weather-related events, geopolitical conflicts, frequent geopolitical conflicts, fragmentation in global trade, fragmentation in capital flows. Then you have other challenges like the possibility of heightened financial sector volatility. So therefore, there are lots of downside risks. At the same time, there are also upside risks. What is for real today is that global growth is improving, but at a slower pace. But nonetheless, there is growth. The IMF has projected global growth to increase by 3.2% in the current year and also 3.2% in the next financial year. Of course, this is lower than the historical average. The trend of global growth, or the historical average of global growth over, between the period 2000 to 2019, when it was about 3.9% or so. But nonetheless, with 3.2% global growth, if there are upsides to growth in the larger economies, and if there are less of geopolitical tensions, so there are lots of upside risks and downside risks to any forecast. But after weighing all these upside and downside risks, we are pretty confident at the moment about achieving 7.2% growth. And I say it on the basis of a few reasons, on the basis of few factors. One is that currently we witness the growth momentum is very strong. This is something which is missed out by many people. In the last financial year, the fourth quarter growth momentum, that is month on month, from month to month, in the last quarter of the last financial year, that is from January to March this year, the growth momentum was very strong. And in the first quarter of this financial year, that is from April till now, almost we are at the end of June, the momentum continues to be strong. And there is absolutely no reason, I find no reason why the momentum should slow down. In fact, our analysis shows that the momentum could even be higher. And the monthly bulletin, our researchers have, every month they come out with a monthly bulletin. In fact, the nowcasting team projects a slightly higher growth for the first quarter compared to our projection, that is the Monetary Policy Committee and the Reserve Bank's projection of 7.3% in the first quarter. The nowcasting team projects it at a slightly higher, about I think 7.4 or something like that. But anyway, without getting bogged down in too much in numbers, what I'm saying is that the growth momentum continues to be strong. Again, rural consumption, which was lagging behind for a long time, has picked up. The sales of FMCG goods in the FMCG sales volumes have increased in the rural sector. The monsoon is looking good. NREGA demand is less, which means that there is more work available in the rural sector. The monsoon is good. I mean to say that the forecast of the monsoon is good. There is a bit of a lull in the last couple of weeks or so, but the IMD expects the monsoon to pick up. The external demand is also picking up. All international agencies, whether it is the IMF or the WTO or the OECD, all international agencies expect global trade volumes to be higher in the current year than last year. Last year, global trade volume grew. According to one projection, there was a slight decline, but according to most projections, the growth was only marginal. This year, all the international agencies expect global growth the growth in world trade volume to be 2.7 to 3% in that range. Now, a 2.7 or 3% increase in global trade volumes is a huge growth, because we are talking about the entire global trade. So that should create additional, that should create better external demand for our goods and service, for our manufacturing as well as for our services sector. Talking about services, the services sector is doing extremely well. Our services exports remain very strong. They were very strong last year. The momentum continues even this year. On the supply side, manufacturing has also improved, as reflected in the various, the IIP numbers or the PMI numbers. The flash figures also have come out 2 days ago. The flash figures of Purchasing Manager Index, they also are marginally higher than the previous month. And the private sector capex is now picking up. There is clear evidence of private sector capex now picking up. Government capital expenditure has sustained the growth story over the last 3 years in the post-COVID period. Now the private sector investment is picking up in specific sectors, for example, in cement, steel, all the sectors, most of the sectors associated with infrastructure are seeing that growth. Now, to sum up what India has been experiencing and what India needs in the future is a growth that is driven by multiple sectors. India's growth story has been and will be a multi-sectoral growth, and our approach to growth in India has to be a multi-sectoral approach. A country of 140 crores, a country which is now the 5th largest economy, aspiring to become the 3rd largest economy, a country which has aspirations of becoming an advanced economy when we reach 100 years since our independence. A large country like this cannot depend on a single sector, whether manufacturing or services or export-led growth or whatever. It has to be a multiple sector driven growth story for India. Domestic demand, domestic manufacturing has been our mainstay. Services sector has been picking up in the recent years. And in agriculture sector, its share has been coming down. But agriculture sector, a lot of achievements have been done. But I think there is still a lot of work to be done in the agricultural sector, especially with regard to improvement of the supply chains and the value chain framework. But I think the agriculture in India has become, in the recent years, much more climate resilient than what it was, let's say, about 10 or 20 years ago. So therefore, India, often I hear discussion whether India should be a service sector growth or manufacturing sector growth. Now, I'm not joining issue with all that debate which goes on. What I'm saying is a large economy like India, the growth story has to be sustained by multiple sectors. Now, in this kind of scenario, what is the Reserve Bank's role and what resolve the role the Reserve Bank, being the central bank, is expected to play, and what role the Reserve Bank has been playing. Now, as you know, and it was mentioned, thank you for mentioning it, I think the Reserve Bank has enabled the country's financial sector. We have facilitated the country's financial sector to navigate through the multiple crises which we saw in the last 4 years, starting with COVID, the commencement of the Ukraine war, the financial sector volatility, the oil prices, the crude oil and the commodity prices, volatility, ups and downs, and the synchronized monetary policy tightening by the central banks across the world. So the international economic, the global economy has gone through multiple crises over the last few years. And at one time, when COVID, the onset of COVID came, when COVID started, or when the Ukraine war started, the outlook appeared that, it was feared that we will come out of this, every economy, not just India, every economy will be severely hit by all these crises. Yes, economies were affected, there were disruptions. We cannot say that no economy in the world can claim that they were completely immune. But what is unique and what is important in the case of India is that India's economy and India's financial sector have come out much stronger than they were before we enter the period of COVID, or before we entered these 4 years of a crisis for one after the other. In fact, there was overlapping of this crisis also. In this environment, this was possible because of several authorities are involved. No individual authority can take full credit for it. In any case, we are not in the game of trying to take credit. It's our responsibility and we have to do it. So, but Reserve Bank has tried its best, and I think our policies did work. And it has therefore, we now see an Indian economy which is in a much better position. The GDP growth is far stronger. The stability metrics of Indian financial sector is also far better than what it was earlier. Now, with aspirations to position the Reserve Bank as a central bank as a model central bank for the global south, which we have spelled out as a part of our agenda for RBI at 100, that is when RBI reaches its centenary year. So that is our aspiration for the Reserve Bank as a central bank. It should become a model for the central banks of the global south. Now, in the context of supporting the growth story, the central bank has multiple roles. The central bank's primary role is to provide a stable financial ecosystem which would support growth. A stable financial system is required in the interest of sustainable growth. If you are interested in short-termism, if you are interested in short-term growth, the story would be different. But every country naturally would like to have a growth which sustains itself, not only in the medium term, but also in the long run. Now, for that aspiration, and which is the aspiration of every country in the world, the stability of the overall financial system is very important. And that includes, first and foremost, price stability. It includes financial stability, that is the banking and the other sector stability. It includes external sector stability. It includes also the stability of the payment systems. Broadly, 5 things I have put. In the interest of time, I will confine myself just to these 5 points. Now, price stability is, in other words, that is maintaining inflation at the targeted level. Our target, as you know, is 4%. Now, why this 4% inflation target is important? Because research and detailed study has shown that at 4% interest rate, our economy will be far better placed, our financial system will be far better placed, our growth drivers will be able to sustain themselves. High inflation makes the economy uncompetitive, makes the economy an unfavorable destination for both domestic as well as for foreign investment, and it has got several downsides. And above all, a high inflation would mean lowering the purchasing power of the people, especially of the poor people. When the country grows, naturally every section of the society, every section has to grow irrespective of whether they are rich or poor. So inflation in that sense, if it is maintained at the targeted level, ensures the stability of your growth trajectory. I hope I am not becoming too technical or anything, and I am able, so if you get bored, you please tell me. I will immediately cut short, and maybe we can have some interaction. And so I'll try and lighten the mood by providing one or two sort of anecdotes here and there. I think Nilesh knows about it. So I'll try and sort of bring in some, anyway. So I'll leave it for a little later stage. So therefore, inflation is, maintaining the, ensuring price stability, that is inflation at the target level, is very, very essential. And we in India, thanks to the measures which have been taken by the Reserve Bank over the last, 2 years, more than 2 years, that is with the commencement of the war in Ukraine, when our inflation touched 7.8% in April of 2022. Now the latest number we have is for May this year, when it has come down to 4.7%. So that means inflation has come down by about 3.1%, by 310 basis points. It has come down primarily due to the monetary policy action taken by the Reserve Bank, and of course, the number of supply side measures which the government has initiated. So a mix of both the factors have played their role. Inflation is moderating, but moderating at a slow pace. We are still at 4.7 in striking distance of 5%. One severe weather event, vegetable prices may go up and we will be at 5%. So we have to navigate our path towards the 4% inflation target with a clear and unambiguous focus and commitment to bring down the inflation to 4%. There cannot be any wavering at, there cannot be any distractions at this stage, because if any distraction will severely compromise growth. As in the game of chess, in any other game, if you make one mistake, perhaps, I am qualifying it, some cricketer may question me, you play one shot very badly, but you can play the next shot very well. One shot you were about to be caught, but you were not caught. Next, the next shot you can go for a 6. We saw it yesterday in the cricket, it did happen. It can happen in many games, but there is one game where if you make one wrong move, you are finished. That is the game of chess. The game of chess, if you make one wrong move, you can lose the game. Like that, the battle against inflation, when you are dealing with the challenge of inflation, one single, that is a single wrong move, can just distract you, can throw you off track. And coming back to the track will be far more costly and will take much more time. So therefore, as in the game of chess, we cannot afford to make any mistake, we cannot to make any policy error, or we cannot afford to make any wrong move. We have to play our game, we have to decide our monetary policy actions, primarily driven by the inflation numbers that we have and the outlook that we have, because monetary policy is always forward-looking. Now, normally, if growth is well sustained, if you have good growth, then it is a clear sign that your monetary policy, your interest rates are not acting as an impediment to growth. In the last quarter, the GDP recorded a 7.8% growth. In the first quarter of this financial year, we expect 7.3% growth. So growth is well sustained, and the outlook for the current year looks very optimistic, and we are very sanguine about the fact that India will record 7.2% growth in the current year. So with a good growth outlook gives us the necessary space to completely, unambiguously, not single-mindedly, but unambiguously focus on inflation. So therefore, that is our target. Now, I have often heard in the, some debate about other factors that concerns that growth is slowing down. I can say with confidence that the momentum of growth month on month, please look at the numbers. They are not slowing down at all. They are holding on, and therefore there is no worry on that side. There has been some debate, various other debates about whether the real rate is high and all that. Now, you see, I'm not again going into that debate. The point is, growth is well sustained. Outlook is for 7.2% growth. Inflation is at 4.7%, with a lot of downside risks, with upside risks in the sense that if we have a very good monsoon and if certain things play out, then we can even have a faster, we can attain the target much faster. But at the moment, considering the mix of factors, I do not draw comfort that inflation is going to reach 4% just tomorrow or day after. It will take a few more months. I see some optimism in the next year, in the next financial year, and this I am saying on the basis, I'm not saying anything new. This is very well explained in the monetary policy report of the Reserve Bank, which comes out every 6 months. And so therefore, at the moment, growth is well sustained. Inflation is moderating, but we still have a distance to cover. So therefore, we have to be very patient, we have to be very careful, and we have to sort of navigate in a very careful manner, not committing any mistakes. We are sanguine about our growth. We are also sanguine about our disinflation process of achieving 4% target down the road. We have given our projections, but still at the end of the current year, our average inflation in the last quarter, that is January to March, is likely to be in the order of about 4.6%. Again, in the striking distance of 5%. One single weather event of severe nature, we will be touching 5%. So therefore, we are completely focused on, as a central bank, we focus on price stability, we focus on controlling inflation because it is in the interest of long-term growth. The second point is, the second aspect is maintaining financial stability. The stability of the banking sector, the stability of the NBFC sector, and the overall, overall stability of the financial system. Today, the banks and the NBFCs are perhaps, the health of the banks and NBFCs are perhaps at their best in a long time. The non-performing assets, the gross non-performing assets ratio has come down. They're at about 3% or a little less than, banks it is less than 3%. NBFCs are around that. The capital adequacy, whether profitability, from all parameters, the banking sector and the NBFC sector continues to be very healthy. The external sector in India is also very stable. By external sector, yesterday we released the current account deficit numbers for India, and the current account deficit for the financial year 23-24 is 0.7%. Gone are the days when current account deficit was almost close to double digits. Last year, our current account deficit, last year meaning 22-23, it was about 2.1%, if I remember correctly. 2.1%, it has come down to 0.7%. Of course, I mean, in an academic discussion, somebody can argue that a current account surplus may not necessarily be, good, because a current account, if you should not, having a current account deficit, let me put it this way, having a current account deficit is not all that bad, because you are taking capital from outside, whereas the current account surplus means you are exporting capital outside and you are not able to absorb it within country. So a moderate level of current account deficit always would be better, and that is because it doesn't reflect, it doesn't show that it's a situation where you are not exporting capital, but you are getting capital from outside. So the financial sector remains stable. The external sector, with a current account deficit of 0.7%, is very stable. The outlook for the current year is also one of stability. The foreign exchange reserves have now crossed $650 billion US, and there was a time when, during the taper tantrum of 2013, there was severe stress felt by India when there was a lot of outflow of dollars, and there was severe stress on our financial sector. But today, I think all the investors into India have full confidence that with such huge reserves, India will be able to meet its external sector obligations. So no wonder that after the advanced countries central banks, that is the US or the Euro, the ECB or the other advanced country central banks, when they increase their interest rates in a normal situation, earlier there would have been greater flight of capital. Yes, there was some amount of flight of capital, but we were in a much better position than earlier because our forex reserves were very high. And it is a matter of I have stated it time and again, it's a stated policy of the Reserve Bank that we would like to build up adequate reserves. We are at, I think the last print was about $653 billion US dollars or so. So it is $650 billion plus, and that I think gives a lot of stability to our system. And finally, the stable payment system, much has been spoken about, is UPI. CBDC is again a game changer. I think the future of money is CBDC, and I think on that CBDC also we have done a lot of work. Now I will not go into detailed part of it. Why CBDC is important is that it's not in competition with UPI. CBDC and UPI will coexist. In fact, we have made both UPI and CBDC, which is now, of course, in a trial mode. The central bank digital currency is on a trial mode now. We are running a pilot project. We have made it interoperable because the same QR code, you can make UPI payments, you can make CBDC payments, you can use a sort of CBDC to transfer money into somebody's account through his UPI. I mean, it's all interoperable in multiplicity of ways. And we have started introducing new features into CBDC, that is having programmability. That means you can program when you give CBDC. Let's say if government is giving scholarships to students, it can be given in CBDC and it can be only programmed in a manner that it can be used if that is the policy to pay fees in a college, or if you are giving some subsidy, for a particular, let's say if you give fertilizer subsidy in CBDCs, you can program it in a manner that the CBDC can be encashed only in a recognized fertilizer depot. So CBDC has got a lot of other applications. It can facilitate smart contracts in the payment system also. So overall, therefore, as a central bank, we have issued our agenda for RBI at 100. We as a central bank remain fully committed to supporting India's growth story. And in modern times, today, technology has become very important. We are also at the forefront of adoption of technology, adoption of innovation. So therefore, Reserve Bank has been and will remain fully committed to all its mandates, whether it is price stability, financial stability, external sector stability, payment system stability. Reserve Bank remains fully committed to all the responsibilities that are assigned upon it, that are assigned to it, and the Reserve Bank remains committed to supporting the India's growth story. With this, I will stop here. Thank you very much for your patient hearing.
Thank you, sir, for such a positive outlook. Our members would like to ask some questions if you...
Okay.
Yeah. So...
Hello. Sir, you talked about controlling the inflation, and while talking on that subject, you also mentioned that the vegetable prices or the farm prices, they always play a very pivotal role in this. On the other hand, we are also talking about increasing the farm income to the farmers. Many times we see that whenever the prices go up, especially the onion, tomatoes, and all those perishable items, the government intervenes and they probably stop the exports. On the other hand, when the prices really drop, there are incidences when the farmers had to really throw the produce on the road. is it not necessary that the farmers should be given a freedom to play with their prices? Because the farmer has to increase the income, and the prices, remunerative right prices will play a very good role in making our farm sector healthy. What do you think?
You see, first thing is that the question which you have asked, it's a very important, it's a very valid question, but it lies in the domain of the government. So as the central bank governor, I would not venture into that area in this forum. But I would only like to say that, you know, and I'm saying it with all seriousness, there are contradictions in life. If life was so simple, straightforward, then, you know, by life, I'm not saying in a philosophical sense, but even with regard to the economy, even with regard to business, there are always lots of contradictions. The government has to balance all these contradictions and has to move in a balanced manner, move forward. The government has to balance the interest of the farmers with the interest of the consumers also. Every citizen in the country is a consumer. But the farmers are also in the percentage of farmers, the percentage of people dependent on agricultural income is also large in our country. So a balance has to be found. It's a very, you know, it's a very complicated and complex task, a challenge for every government. Balance has to be found between both. Now, take the case of, for example, the valuation of the Indian rupee vis-a-vis the dollar. Now, importers would say that, you know, we want a stronger rupee vis-a-vis the dollar. Exporters would naturally want a weaker rupee because his export income will be more. Now, as a central bank, we have no preference whether rupee should be this. We have no specific level of the rupee in mind that so much, $1 should be so many rupees. We have no such view. But what I'm saying is these are the policy dilemmas that the central bank also has to keep at the back of its mind. But I would like to say emphatically that so far as the rupee-dollar ratio is concerned, it is market determined by market forces. We do not have any level. But what I'm saying is there are multiple stakeholders in the economy, and there are, you know, what is good for me may not be as good to you. I just mentioned another contradiction in expectations between the importers and exporters. Similarly, between the farmers and the consumers, there can be some contradiction. But let us also remember that the farmer is also a consumer. The farmer just simply doesn't eat wheat. I mean, apart from wheat, he buys so many other things for his day-to-day living. So it is also in the interest of the farmer to have low inflation. Ultimately, low inflation means higher purchasing power in the hands of the people. In fact, if you calculate, if you just aggregate and imagine, if inflation comes down to from 6% to 4%, the additional, you know, that benefit which I have, that much of money which I as an individual, if I have in my hands, multiply into the number of households in the country, 140 crore population, let's say divide it by 4 or 5 average size. This number of households has, so just imagine at the aggregate level, how much of purchasing power you are creating by maintaining a lower inflation. And that much purchasing power means that much more sale or purchase of goods, that much more addition to growth, that much more contribution to employment. Yeah.
Thank you, sir. May I now request our President Ritesh and President Designate Pinky to please give a token of appreciation to the Honorable Governor. Sorry, the Governor.